Welcome everyone, this is John Cheetah with your Trading Room, and this is our Renko price review for the price action of January 17th, 2012. However, before we begin, we must remind everyone that the trading of stocks, options, futures, and Forex does involve substantial risk, and past results are not indicative of future returns. Before I begin our examination of the Renko charts for the past several weeks, we're going to take a look at the strong bearish trend that has existed in the euro dollar in the daily prices. Now, one sign of a strong bearish trend is a sloping moving average that is consistently lower and lower over time. As you can see, we've had that for more than 6 weeks. Another sign of a bearish trend is that each rally as a correction against the trends have all been rather small in size. The indicator that you see in this blue line is the lowest close plus 2 average true range. And we track this value to give an indication of just how large a correction is in terms of average true range of price. Now, as you can see, many times corrections against the bearish trend have been less than 2 average true range from each of these preceding lows. Let's take a look at our Renko charts for each of these rallies that has occurred in the euro chart over the last several weeks. Now we're taking a look at the 10 pip Renko chart and the euro dollar. Now, you've probably noticed we have 2 indicators above prices in the upper regions and 2 lower indicators at the lower part of our screen. Now, what these are special indicators created for our members, which we call our volatility bands. These are certain distances, 3 and 4 average true range, above the 60-minute moving average, a very popular moving average tracked by many Forex traders. Now, here's what I want you to notice. Notice that when prices get into the upper volatility bands, it is beginning to be a clear indication of a possible reversal, especially in the direction of the severe bearish trend. Because remember, the euro has, certainly there's corrections within the daily trend, but the market has a tendency to return to the bearish trend. Like a force of gravity, prices pull the market down back in the direction of the bearish daily trend. So we have seen 2 occasions where this has occurred recently. Now let's take a look at the price action today, and we basically saw 2 possible trades. In one situation, we'll look at the most recent, and you're seeing a line of support. That is one of the beauties of Renko chart. You can see the market correct, create a couple of down bricks as they're known in Renko chart, have a rally, and then begin to move down. Now, I'm going to draw a horizontal line to indicate a line of support. So one of the potential signals in our Renko chart was a break of this support for a possible short that basically you can tell during the life of this particular trade was up 10, 20, 30, even 40 pips. Of course, one of the other signs that a trader could have been comfortable in is the quote double top that was formed in the Renko chart. However, that was looking and taking a trade in the bearish direction during the afternoon. Let's see what traders were seeing earlier in the trading session. And you've probably seen it right ahead. We began to move below these volatility bands, letting us know that the market was beginning to be oversold and that there was a sign of a potential reversal. So now let's draw a line straight across again of the resistance that was very clearly demonstrated in the Renko chart. Look how easy that Renko chart defines resistance. As you can probably see, we have a solid brick being formed, breaking this resistance, and a trader trading on the long side, trading on a correction from an oversold market, and look at the number of pips a trader could have gained trading the Renko breakout above resistance. Now, it wasn't just any sign of resistance, it was a break when the market was oversold as indicated by the volatility bands. Look at the previous correction that we had seen in the daily price. You can see the line of support that's being formed, a break of that support for a possible short. Now this short is in the direction of the daily chart. Look at the number of pips that could have been gained as a trader was resuming the trade of the bearish trend. You're looking at a move of over 150 pips in the direction of the daily trend, all clearly identified by our 10 pip Renko chart. These are just two examples of how the Renko chart can be used by beginning traders to spot breaks of resistance or breaks of support to gain pips and, more importantly, dollars out of the Forex currencies. This is John Shealy with your Trading Room.